Hello traders, welcome to your Follow the Bots S&P 500 Daily Market Recap, sponsored by Zaner. Since 1980, Zaner has been helping futures, commodity, and forex traders trade smarter, faster, and easier.
Hello traders, Bill Duryea here with Follow the Bots. Welcome to the Daily Market Recap, a detailed review of the market structure and the key support in the S&P 500 E-mini. Today is Thursday, September 26, 2013. S&P futures pulled back off their multi-year high up at 1727 and have sold down and found support at the minor 3-day high at 1684. S&P futures retested the low again today, and the market auctioned up off the low into the close. As the S&P sold down from its multi-year high, the prior week support was located down at or near 1687. This week the market extended the low modestly, pulling back to the prior support level at 1684. As you can see, the rate of decline has slowed, the Kalman filter has gone flat and turned up, and the slope of the polynomial regression channel has turned up off the low as well. Minor resistance in today's session was located up at or near 1696, 1698. S&P futures traded modestly lower than that during yesterday's session. However, the day before the market auctioned up to 1701. This level now represents the breakout level in the event that price auctions above 1701. The likelihood is the market will trade up to the next resistance target at 1712. For a detailed look at today's market developments, we'll turn our focus to the 5-tick range chart. Overnight, the S&P traded within the parameters of the previous day's high. Prior to the open, the market pulled back to retest the close of yesterday's session down at or near 1687. Buying interest entered as the market pulled back to retest the prior day's close, and the S&P auctioned up exponentially above the opening range high and traded up to 1697. The buying interest waned when the market auctioned to the high, and the execution sequence turned lower, paused momentarily, and then declined in the same exponential fashion that it rallied. The market pulled back and retested support, trading down again to 1687. Following the sell-off, when the S&P traded back down to the low, the computerized trading programs ceased executing to the sell side and initiated buying entered, and price auctioned up off the low and traded back at or near where the selling had occurred in the morning. The market lost interest on the retracement back up to 1692, and price pulled back and retested the low late in the day. The pullback met with a buy reaction, and high-frequency buying occurred into the close. Coming into tomorrow's session, support is now established down between 1688 and 1684. Minor resistance is located at 1689. The next resistance level is up at 1701. In the event the S&P auctions up to 1701, the distance between the current low at 1684 and the retracement back to 1701 is equal to a daily range, we would expect to see the market pause and pull back prior to it breaking out, if indeed it breaks out. There is still an equal likelihood that the S&P will encounter selling pressure if indeed price auctions back up to 1701. The expectation would be that price will pull back before going higher, as well as the possibility of selling all the way back down and retesting the low. That concludes our daily recap for the S&P 500 E-mini. If you would like to follow our real-time commentary, we invite you to visit us online at www.followthebots.com. Log into our broadcast and join us some morning at the open.
For more information regarding Zayner's brokerage services or the content of this broadcast, contact Neil Rogers, nrogers@zayner.com, 312-277-0135. This is Cuerva from Follow the Bots. Happy trading.